Hello guys, welcome back to the channel. In the previous few videos, we have learned all the necessary stuff required to trade chart patterns successfully in the market. We went from discussing continuation chart patterns, followed by reversal chart patterns, and finally we have talked about neutral or bilateral chart patterns. If you haven't already watched these videos, make sure to watch them before continuing with this video. Now, I am assuming you know how to identify and trade these chart patterns in the market. But one of the hardest things about chart patterns is spotting them on charts across different stocks and indices. Think about it. Chart patterns show up in different time frames, from intraday time frames to daily or weekly or even monthly time frames, and that too across different stocks and indices. So as a trader, you have two jobs. First, you have to identify suitable patterns of your liking. Maybe you like trading triangle patterns, or maybe you like pennants and flags and so on. So identify the pattern of your liking. I will suggest you follow 2 to a maximum of 3 reliable patterns rather than going after every pattern you find in the books. Trust me, it will do more harm than good. And if you ask me my personal favorites, then I would say triangles, rectangles, channels, and sometimes I even bet on head and shoulder patterns also. Now the next step is to filter out the good trades from the not so reliable ones. But trust me, it is an exhausting job to look for chart patterns over each and every stock, draw them, analyze them, and finally filter them for trading. So in this video, I will discuss 3 methods that you can use to spot chart patterns in the market. So watch the video till the end because the methods for finding the patterns get easier as we proceed through the video. Also make sure to like and share this video, and if you haven't already subscribed to the channel yet, please make sure to subscribe and enable the bell notification so that you won't miss out on any upcoming updates. So without wasting any time, come, let's get started. Before we discuss the different methods, let me make something clear up front. Let me explain the reasons why spotting chart patterns is a difficult task. Number 1, most charts are uneven and noisy. Most stocks and index chart consist of deep wicks, price gaps, false breakouts, overshoots and undershoots, all resulting in making the pattern determination a hard task. This is particularly true when we move to the lower time frames. What this means is that on a higher time frame like daily, weekly, etc., the chart pattern determination is fairly easy and forms slowly so that we get enough time to plan our trades appropriately. But this is not the case in lower time frames like 5 minutes or 15 minutes or even 30-minute charts, where the chart patterns get formed very often, but it is always tricky to mistake one pattern from another as it happens quickly, and often we won't be able to plan our trades adequately. Another point to keep in mind is that the more fluid the market price movements, the easier it is to spot these patterns. The point that I want to make is that forex markets, which are open all week long, are one of the best markets for pattern trading, unlike Indian indices like Nifty or Bank Nifty, where there are big price gaps and backlashes due to aftermarket sentiments. Due to this very reason, you can get good entries and exits due to regular price moves in forex, unlike stocks or indices, which can sometimes affect your trades due to unpredictable price gaps. But most of us like trading in stocks and indices, so it is important that we identify the pattern correctly and plan our trades beforehand. So let's discuss the very first method of doing this. The first method uses the inbuilt TradingView indicators for spotting chart patterns. This feature is only available in TradingView charts, so make sure you have at least a free account in TradingView. All you have to do is to select the chart of your liking, be it a stock or an index or a currency pair, and then select the time frame that you intend to trade the pattern in. So if you are an intraday trader, select an intraday time frame anywhere between 3 minutes to 30 minutes. Or if you are a swing trader, go with a much higher time frame like 4 hours or 1 day time frame. Once you are done with these steps, go to the indicator section on the top toolbar section of TradingView, click on it, and as you can see on the left hand side, there are different options like favorites, community scripts, my scripts, etc. And you need to select the technical section. And once you do that, you will find a lot of indicators to choose from. But the ones that we are looking for are related to chart patterns. On the top section of this pop-up, you can see multiple options like indicators, strategies, volume profiles, etc. So click on the one that says auto. Now as soon as you scroll down, you'll be able to see most of the chart patterns that we have already discussed, from flags, pennants, rectangles, both bullish and bearish, to double and triple tops and double and triple bottoms, to triangles, and finally we have head and shoulders and inverted head and shoulder patterns. Now you might be wondering, where are the ascending, descending and symmetrical triangle patterns? Don't worry, because all the triangle pattern variants are included under the same indicator. But unfortunately, this indicator section actually lacks patterns like channels, broadening wedges and triangles, etc. The next step is to click on the pattern that you want to check on the chart. Let us say I want to check triangle patterns, then I will simply click on the triangle patterns, and if we zoom out a little, you will be able to spot all the triangle patterns which are formed. And as you can see, there is no triangle formation as of now, but there was a triangle formed some time back which gave decent enough returns. Even though the indicator plots the patterns automatically, you are the one who is ultimately in control. So in order to change the parameters, just go to the settings of the indicator and click on it. Now a pop-up appears which gives a parameter called permissible deviation, and by default it is set to 10. And if you want to know what this is, just place the cursor over the eye symbol just to the right of the parameter. Now this particular parameter is used to determine how accurate the pattern form should be. So if you reduce the permissible deviation to, let's say, 0 or even 5, then the number of triangle patterns displayed by the indicator reduces. And if you increase the deviation to, let's say, 25 or 40, then the number of patterns displayed will be more, but some of them will be inaccurate. So either stay with the default value or just play with the numbers and see what works best for you. Now just below the deviation parameter, you will find a tick box saying in progress. Once again, move the cursor over the eye symbol. What it is asking you is that, do you want the indicator to spot incomplete patterns or those patterns which are in the process of formation? Now it is most important to always turn this checkbox on. Only then you will be able to track the upcoming patterns and plan and trade them with ease. And another thing is that when you move from a higher time frame to a lower time frame, the number of patterns spotted increases, but the accuracy of the patterns working out in your favor actually reduces. Now let us look at one more example. This time we will consider a double top pattern. And as you can see, once we have clicked on the pattern, it automatically displays all the potential double top formations. And another interesting thing to note is that this indicator will also give you the projected profit target beforehand. We know that the projected target is equal to the height of the double top pattern from the neckline to the top. Now this is exactly the target being displayed. Now let's select the setting icon of this indicator. And as you can see, there are more options available, like the trend height, second top, and finally the permissible deviation. Now the trend height parameter is asking you for the minimum height of the prior uptrend, since we know that double top is a trend reversal pattern, particularly a bearish trend reversal pattern. So on a strong uptrend, a double top could be a minor retracement, while during a weak uptrend, it could be the start of a potential reversal. So play with the values to find the best combination. Now the next parameter is the second top, which means where do you want the second top to be formed? Do you want it exactly at the same height, or higher, or lower? Depending on this parameter, different double tops will be displayed on the chart. Now the final parameter is the permissible deviation, which refers to the extent to which the second top should vary from the first top. Now more this deviation, the more results will be displayed by the indicator, but with a lower accuracy. So try to maintain a tight deviation and always make sure to tick the in progress box to display ongoing pattern formations. So it is clear that different patterns have different settings or parameters. So it is your job now to select the indicator based on the pattern of your liking and fine-tune the parameters to achieve the best results. Now this method works well. It helps to identify patterns faster on different time frames and on different charts, but it is still a manual job and let's say you need to check all the Nifty 100 stocks for potential chart patterns. How long do you think this process will take? Maybe hours, right? So this is exactly the drawback with these trading view indicators, as it has limited applications, shows lesser results on the chart because sometimes the indicator can be seen missing out on some of the patterns, so it is less reliable. So how to counter this problem of finding all the patterns on different charts on different time frames? Now, one of the great contender for this spot is our method number 2, which is Top Stock Research Pattern Scanner. This is an automatic screener that looks for chart patterns. Once you're in the website, go to the option that says Pre-screened and a drop-down menu appears. From the drop-down, select Chart Patterns. This will take you to the chart pattern screens. And when you scroll down, you get a lot of patterns from double and triple tops, double and triple bottoms, head and shoulders, inverse head and shoulders, triangle patterns. But unlike TradingView chart patterns indicators, here you get the variants of triangle patterns sorted under different sections, followed by rectangles and channels. But here also a few patterns are missing, like flags, pennants, wedges, broadening patterns, etc. But I think this is more than enough because I majorly focus on triangles, channels, rectangles, and sometimes head and shoulder patterns. So if you are someone who is interested in the patterns not mentioned in this screener, then you can skip to the next section of the video. But trust me, this scanner will make life easier for you. As you can see, each pattern has subsections based upon different trading periods like short term, medium term, and long term. And under each subsection, there are different time frames from 5 minutes to daily through monthly. Now, depending on your trading style, that is how long you intend to hold a position and what time frame you trade on, select an option that suits your requirement. So it may be a short-term trade on a 15 minutes time frame, or a medium-term trade on a 2-hour time frame, or even a long-term trade on a daily or weekly time frame. So once you have fixed the duration and time frame, select it on the chart pattern you wish to scan for. And once you click on it, you will get a list of stocks that satisfies the criteria. But in the free version, you will only get a maximum of 3 results. And if you want more results, you need to purchase the premium plan, which costs around 2000 rupees for an year. But I suggest you use the free version for a while and see if you really need it. Now let's get back to the discussion. Once the result comes up, we get to see all the necessary details regarding the pattern, namely the prices at which the pattern formation took place. This is particularly useful because it helps you check for the pattern in the charts quite easily, as you already know the price points to look for. But there is already a built-in chart feature in the screener. You can find this to the extreme right on the table. Once you click on the icon, it will take you to the chart, which is by default a line chart which shows the pattern's necessary price point with orange stars, which makes it easier to spot. You can change the charts to candlestick by simply selecting from the drop-down menu on top. You even get the option to change the time frames and also the periods under consideration. You can also find some useful indicators like volumes, moving averages, RSI, Fibonacci, etc., which you can make use of. Or else you can always go back to your preferred charting tool like TradingView, which is much more powerful and easier to operate on. So this is how you can use this scanner for spotting potential chart patterns. You can check all other pattern screens in the same manner. Also keep in mind that this scanner will only scan for ongoing patterns and it will not show any data of previous patterns formed, which is necessary for backtesting. Now the drawback that I found out was that Top Stock Research is not flexible enough to sort which category of stocks to consider. For example, I can't just run a scan on only Nifty 50 or Nifty 100 stocks. Due to this, the scan result can sometimes come out to be penny stocks or small gaps, which is very risky and illiquid. Also, it lacks some good patterns, but it is somewhat compensated by the pattern breakout scans, which give result of those patterns which have just broken out of the consolidation range. Okay, now let's get on to the final method, which revolves around screeners itself, but here you have more control. I'm talking about charting and Zerodha Streak. Both these are powerful screeners which are easy to use as there is no need to learn any custom codes, but you still need to input the logic that you want to run on the chart. But this process is quite easy and user friendly. Let me talk about charting first. One advantage with charting is that it has been around for a while, so most of the chart pattern screens are already available. So all you have to do is to search for the particular chart pattern that you want to scan on the chart. Now how should you do this? I will explain. In the top of the home page of charting, you will find a screener menu. Just click on that option. Now a lot of scans just show up, from fundamental scans to top cloud to candlestick pattern scans, but the one we are looking for are chart pattern scans. But we won't find any in this section. So what you can do is that you can search for the required scan. Let's say I want to scan for a descending triangle pattern. Just type it and hit search. A large number of scans show up. Now which one to select? Usually the ones shown at the start of the results are the most loved scans. So always try to stick with the first top 10 scans. For now, let me just click on the first result and it will take me to another page where I can see the logic written in simple and understandable manner. Now if you notice, the first line says stock passes all of the below filters in cash segment. Now this is where you can filter out stocks based on your requirement. All you have to do is to click on the word before segment, which in this case is cash, and you will see a drop down list of all the available segments that you can choose from. So if you want only those stocks from future segment or only from Nifty 100 or Nifty 500, just select it and move down the cursor to the run scan button and click on it. A new scan will run and it will give us the required shortlisted stocks under the segment that we have considered. You can analyze every chart by clicking on the stock name, but I'm not really a big fan of charting tool, so I would rather do my analysis on TradingView or my trading terminal. Now if you have noticed, the charting free version data is delayed by some 15 minutes. So for intraday chart pattern trading opportunities, using the free version of charting won't really work out because the signals come late. But if you're someone who is into swing trading or someone who uses end of the day data, then this is not a big deal if the data is delayed. Also, other features like alerts are only available on the premium version where you can set a lot of alerts for the setup you're looking for. But I don't feel like you should pay money for premium version because first of all the charting is poor and you have to run the scans manually for new stocks and you can't do an automated trading and so on. Now that brings us to our next screener come strategy tester come algo trading site by Streak, which is a part of the Zerodha ecosystem. You need to have an account with any of the following brokers. I already have an account with Zerodha, so I will log in with Zerodha. And once you log in, you will be welcomed with a neat homepage where you can see a discover section with the well-performing strategies. But for now, we are only interested in scanners. So on the top, click on the option that says scanners and a drop-down appears. Just click on the discover option and it will take us to a new page. And as you scroll down, you will be able to see a lot of custom scans. Now we will have to look for chart pattern scans. For that, click on the search scanner box on the left side. Then you can search for the pattern that you like. But the problem with Streak is that there aren't much chart pattern scans available. A few of those already available scans includes triangle patterns, double tops, double bottoms, triple bottoms, rectangle patterns, and that is very much it. So the only way to get other patterns is to make them by your own. You can do this by going to create new on the right side panel, or you can even find this on the top scanners drop down, which goes by the name create scanners. Just click on any of them and you will be taken to a new scanner creation page. It gives you the option to select the segment of stocks that you want to run the scan on. Now the interesting thing is that you can even scan options contracts of different expiries. Now the next option is to select the time frame that you want to run the scan for. You get time frames from 1 minute to 1 day. The next option is to choose the chart type. You can select between candlesticks and Heikin-Ashi. Then there is a conditions section where we will enter the required conditions for the pattern. So what I recommend is that you go to charting, search for the pattern you wish to trade, then select the most loud scan of that particular pattern, copy or screenshot the code logic, and then come back to streak and fill the conditions into the condition section. And once you're done, give it a name and run the scan. Right now, I don't have a premium plan for streak, so I can't run a scan. But if you have a regular or ultimate plan, you can run a large number of scans every day, and you can even do a lot more than that. You can backtest most of your trading strategies, analyze them, and even trade these strategies virtually using paper trading, or you can do real-time trading using your broker. I think it is a value for money, so you can check it out. But this is not a recommendation or promotion. I'm talking based on my experience because I have used this for backtesting my strategies and paper trading automatically before I trade with real money. So I think that is all the three methods that I wanted to share. All of them have their own pros and cons. So try all of them and choose the one that works well for you. And if you have enjoyed the video, please don't forget to like and share. Also make sure to subscribe to the channel and enable the bell icon so that you won't miss out on any upcoming videos. I will see you guys with another video. Till then, bye.